Let's focus in now on oil. It's been swinging sharply this afternoon. We've just seen that it's down, trading below $75, reversing earlier gains. There are mixed reports about a potential halt in the Israel-Hamas war. Meanwhile, OPEC is signaling that production cuts will continue through the first year. Here to help us figure it all out, Rebecca Babin, senior energy trader at CIBC Private Wealth. Rebecca, thanks very much for coming on the show.
Thanks for having me.
I know the Mideast situation, the possibility of a halt in the fighting is murky, but is that a big driver for oil right now, threats of supply from the region?
So it is a big driver of oil, and I would say this. There isn't a huge risk premium in the commodity for loss of barrels due to what is happening in the Middle East right now. What's largely been priced in is this extra shipping costs and time to divert around the Red Sea and get the barrels where they need to go. So that's accounted for about $2 to $3 of flat price increases in crude. So I'm not surprised to see this reaction right now. If we do indeed, which is obviously unconfirmed, get a ceasefire, that you might see those shipping costs start to come off, and thus that gets sucked out of flat price. Obviously, there's another element of geopolitical risk that is baked into the commodity just based on the headlines and a calculation error, but it's not extreme. It's maybe $1 or $2. All in all, this should be about a $3 to $5 hit if we got a true ceasefire and a pure de-escalation in the region. Of course, crude is known to overshoot, both on the upside and downside. So that knee-jerk reaction could very well push it beyond that. But I think from where we have seen things settle out, that's kind of the number that I think the street is focused on, $3 to $5 of premium in the commodity based on longer shipping routes and maybe a calculation error.
Turning to OPEC Plus and its production, you reckon that OPEC Plus is determined to support prices and would even consider extra output cuts? I know that might be a stretch, but they could push forward with further measures if oil is weak enough?
Yeah, I think to a certain extent, OPEC Plus has backed itself into a corner here because they really are determined to keep the market stable. But what they're realizing through the feedback loop here is each cut they do, in addition, is having a less and less impact, and that they really need to see inventory draws for the commodity to start to rally. And the only way they're getting there, every time they cut, another non-OPEC provider of crude, whether it's the US, Iran, Brazil, Canada, seems to step up and fill in the gap that they've left. So they're in a situation now where they kind of have to stay the course and be very aggressive to really get the commodity going. I don't think they're willing to reverse course, which is their other option, and go into a market share war and really start overproducing and drive prices way lower. It's just not going to provide the stability they need for their bigger objectives, which is Vision 2030 and a diversified economy. So in order for this to work, they need to stay with it and they need to be aggressive. And I think they've demonstrated they'll do so. Now, getting the smaller members, i.e. not Saudi Arabia, Russia, to go along is getting more and more challenging. So they're going to have to figure out ways to incentivize their smaller members to stay the course. And I believe that's the hardest part of what they have going on in the next year or two, is keeping everyone in line and convincing them that this is the strategy that's going to work for them. But I believe they're committed, and I think if they need to, they will cut more.
According to Bloomberg this afternoon, nations such as the United Arab Emirates and Iraq are overproducing their quota. Is that a problem for OPEC Plus's broad strategy?
It's not great, that's for sure. So I think Iraq has been a kind of notorious overproducer.
Yes.
I think Saudi Arabia does have enough influence over them to get them in line when they need them to. It's the first month of these new voluntary cuts that were announced in December. So there may be a little bit of a grace period here in month number 1. Get yourselves together. We want to see these cuts starting to come through, but I believe they have the sway over Iraq to do so. They absolutely may have a battle on their hands with the UAE. The UAE fought hard to get an increase to their quotas this year, which they get. So that conversation is probably a little bit more difficult. But at the end of the day, everybody in that group knows selling X number of barrels at $80 is a heck of a lot better than half of those barrels at $50. So you know, they're going to have to figure out how to convince everyone to stay the course. I think they have enough influence to do it, but it is getting more challenging.